Hi, it's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of April the 5th. Hope you all had a great weekend. Hope you had a great Easter weekend. Well, the first quarter is done, and now we're into the second financial quarter. It's just amazing how time has flown this year. We're starting to see masks come off, and we're starting to see the businesses and the economy open up, which we're all so happy to see. So how's this affecting the market? How did it affect the market last week? Well, last week actually started and ended the same, pretty flat. We had some volatility in between, but really not much of a change to mortgage rates, which was a nice break from all the volatility we've seen over the last few months. So what are we looking at this week? Three things. We're looking at the Fed, we're looking at services, and we're looking at inflation. So there's not much economic news this week. We've got some stuff at the end of the week, but really the minutes of the last Fed meeting are going to come out this week. We don't expect any changes to what they announced in the last few weeks, but if there's any variation or tweaks to what happened with the Fed meeting, yeah, that could probably drive rates higher or lower. There's more of an opportunity for rates to go up than to go down. So we'll be watching that. And there's also a lot of Fed news with other countries in Europe that could affect the bond market, could drive those rates most likely up than down. Again, more of an upside going up than down. Services. So service-related jobs are way up. We know that the biggest sector hit from the COVID was the service industry. And last week added a lot of jobs to our economy. Unemployment was down, and most of these jobs were really related to the service industries. And this really is no surprise as people are starting to get back to work. We went out to dinner this weekend and the restaurant was full and loaded. And I think a lot of you are experiencing that. So this means positive news for the economy, and that's not great for mortgage rates. So we'll see those rates possibly start to creep up as we've seen over the last few months. The third thing is inflation. Again, we've been talking about inflation for the last few months, that the inflation is on its way up. We've seen it on its way up, and inflation is bad for mortgage rates. The Fed even said last week that they're going to allow inflation to go higher. So why is inflation bad for the bond market? Well, let's say that you have $1 billion in bond investments at a rate of return of 4%, and inflation is 1%. You minus the 1 from the 4, and you have a real return of 3% because inflation eats into your return. Now let's say you have that same $4 billion with or $1 billion with a 4% return, and now inflation is 3%. Now you only get a 1% rate of return, real return. So again, if the inflation goes up, that eats away at your return on your bonds, and that means mortgage rates are going to go up. So inflation is just not great for mortgage rates. When it starts to cost more to buy milk and to buy bread and to buy lumber and everything else, it's eating away at the value of your dollar. Okay? But let's put this in perspective. Mortgage rates are still historically very, very low. There's still amazing opportunities for people to buy a house at much lower payments than a couple of years ago. Even though prices are up, they can still get rates at a very low rate. And there's so much equity in people's homes right now. The last report said that most homeowners have 40% equity in their homes, a significant change from the housing crisis where the average equity was about 10%. So debt consolidation, refinancing, lowering the monthly outgo is still a great opportunity for people. So what are we expecting this week? Light economic week with Friday coming out with what's called the PPI, the Producer Price Index Report, which really looks at the average change of selling prices from a seller's perspective. We expect that maybe to go up. That could drive those rates at the end of the week up a little bit. But there's really more potential this week for a downside than an upside. So we're starting the week floating, watching the market towards the end of the week, and we may end up changing to a locking position. If you or your clients have any insight about interest rates or need any insight about interest rates, go ahead and give me a call. All my contact information is down below. If you know somebody that could benefit from this video, please forward it to them. If you have any comments, I'd love to hear them. Have a great and productive week, and we'll talk to you soon. Bye-bye.